Good morning. Today is Friday, April 8th. I hope you enjoyed the baseball coming back last night. There was a loss for the Atlanta Braves, but that's okay because baseball's back and the Masters continues today. Tiger's 1 under after making that long birdie putt. So good for him. He gave a fist pump. And in terms of markets are coming back a little bit too. Markets were up yesterday and they're indicated to be up today as well. We had some positive news on some of the retailers. Barclays named Target as a top pick for their clients, saying that their survey indicates the underlying sales momentum for Target did not slow into March to the degree most have expected. And they say that the resiliency of the Target model in the face of potential slowdown is pretty impressive. And therefore they are reiterating, they are naming Target as a top pick. We do own shares of Target. Home Depot commented at a conference yesterday, basically trying to address a lot of these concerns that the housing market is weakening and that home improvement is weakening as well. They said that the homeowner's balance sheet has never been healthier, and our consumer in our pro segment tells us that their backlogs have never been healthier either. So the pros, people who are actually hired to go do a job, who purchase from Home Depot, I think that's a pretty good sign of where home improvement is going. They said that there's a bit of a false negative out there with respect to housing turnover. They say that housing turnover in 2021 was a little bit lower, but homes are selling. It's just the availability of homes isn't there like it used to. And he continues to say, and in fact, I would say we are in a chronic housing shortage now in the US, and it's going to take us years to work out of, if ever. And then he said, look, at the end of the day, if people can't find a home, they're going to remodel. Balance sheets have never been healthier. And he says that's a pretty good sign for Home Depot. So good commentary out of that company, good commentary out of Target, which kind of puts a little bit of this retail slowdown into question that a lot of people had been counting on. Continue on with Taiwan Semiconductor sales. Taiwan Semiconductor sales were up 33% in March. That was ahead of estimates. The estimate was up 28%. That's good news. Again, we're really working through these supply chain issues. If you go back last fall, we were only up in the mid-teens, so now we're up 30%. So that's good news there. Finally, on the French elections, we're going to have some news out of France this weekend. The way that they do elections is you have a bunch of candidates actually compete in the election, and then it'll go to a runoff. And the runoff would be held on April 24th. Right now, you have Emmanuel Macron, who's 44 years old. He's running for re-election, and his biggest competition is going to be Marine Le Pen. Marine Le Pen, they call her far right, but that's a little bit of a misnomer. She's more just a populist because she's in favor of higher taxes on the big energy companies. She's in favor of slashing gasoline prices. She's really just a nationalist populist. She casts herself as the defender of the, quote, little ones, and Macron is the president of the rich. What's really interesting is that Macron didn't start campaigning until really a week ago. He said that he was thinking that he would benefit from an improving economy, his handling of COVID, the fact that he was trying to make peace with Putin. And so he thought that all that would probably accrue to his benefit, but it's been the exact opposite. His net polling has fallen from up 12 to up 3 in just a month. And even in a head-to-head battle against Le Pen, he only leads by 5.5 points right now. Big takeaway here is that if Macron doesn't win and if Marine Le Pen wins the French election, you could be in a situation where you have a little bit more, significantly more uncertainty in France, therefore more uncertainty in Europe, and therefore more volatility just in the geopolitical climate, which could spill over into economics. Tom, we've been curious on what's going on with Emmanuel Macron for some time, really ever since January and February, when he was coming out pounding his chest saying that he just brokered the peace deal with Putin. And it no longer seems like that's obviously not been the case. And he seems kind of small, not necessarily in stature, but just in terms of what he can actually accomplish. What are your thoughts on this election? And do you think Le Pen has a chance?
I mean, I think that he's shown himself to be relatively impotent as a leader, at least the last 6 months or so. I think the Putin thing really is number one. I think he really was looking to be the hero in the situation. I think Putin used that against him, and I think he's probably on his way out. I think his handling of COVID was a tough look. He was really one of the last people to kind of roll back the draconian measures that they had put in place. He was really the last one in Europe to say, hey, maybe we're not going to have all these stringent COVID restrictions. After the UK and the US and everybody else had dropped them, he was still going on the record using foul language, saying that he, basically was telling people who were against his restrictions to F off in French is the translation he used. And 2 weeks later, they decided they were going to drop all the restrictions in late March. So I think that was a bad look for him as well. And I think that the populist stance, which is really more of a, the spin-off of the Trump sort of mentality, which is I'm out for the little guy, I'm here for, France and France first, I think really plays, especially on the backs of him being, basically laying down Putin and trying to say, hey, let's have some peace here, and looking fairly weak. And then the COVID restriction stuff, I think it just makes him look fairly neutered. And so I think there's going to be a lot of momentum against him in this election, if I had to guess.
I agree with you. Do you think that it has any impact on markets or on uncertainty?
I mean, I think that it could be a positive turn for France. There's a lot of big government in France is not like big government here. It's far more of a caretaker, far more of a pension-based, government-based workforce. There's all kinds of restrictions on how you can work, when you can work. And I think that, any movement away from that is probably beneficial to the economy of France going forward.
Excellent. Thanks, Tom. I do think that you could have some more vol just with the way that France is so intertwined with the current security interests of Europe, and therefore the reaction to Ukraine. I think that you could have some volatility because all these people, and especially in Europe, and even Joe Biden, are going to have to make friends with Marine Le Pen, and Le Pen's going to come in almost as a Trump figure and try to be nationalist, more populist, and that could, create some schisms potentially in the fabric of Europe and the NATO alliance.
There's something too, just kind of thinking back to calls past the big nuclear sub deal with Australia that kind of went over the head of Macron, where we kind of said, hey, we're gonna buddy up with Australia and kind of take the business away from France. I think was another move that, even us coming in and kind of dunking on France, dunking on Macron specifically in the last 6 months or so.
Excellent. Tom, we've had an interesting shift in the bond market, especially with the shape of the yield curve. What does that say about what's going on? The yield curve has steepened after inverting just a few days ago.
Yeah, we've basically moved out of the death formation of the inverted yield curve, and we moved back up into a more normal steep range. We saw a little bit of flattening yesterday, a couple basis points, but the 2s10s is right around 15, 16 basis points, which is back to where we were a few weeks ago. And additional steepening, I think, is very bullish. I think that it's more of a, hey, we're moving into a new normal economy versus, we're going to be constantly in this, tightening, easing, weird yield curves all the time kind of era that we've been in, at least for the last, 15 years. So if we could get to a normalized yield curve without a recession, I think it would be, excellent. I think the further we get from an inversion, the better. That being said, there's obviously that inversion to think about, and what are the ramifications of that, and does that forebode a potential recession? But I think that I just feel like we talked about this a little bit in the office yesterday, that those things are sort of penciling in. If you're filling out a crossword puzzle right now, the inverted yield curve, you've got to pencil in the potential for a recession, because that's definitely a strong indicator, but it's not in pen yet, and there's a lot of time that's got to unfold. There's a lot of things that got to happen to go one way or the other. But I think it's something that you need to have in the back of your mind, that this is something that could potentially be a problem in the next 6 to 12 months. But I think that it's just too early to tell. There's too many things the Fed could or could not do. There's too many things the economy could or could not do. So I don't think it's a harbinger just yet, but it is something to keep an eye on. And I think the steeper the yield curve we can get, the more we move away from the bad news associated with it.
Yeah, we have some really good data on this that we'll be talking about on Tuesday night at the macro presentation. Please, if you can, be there in person. If not, we will be broadcasting on Zoom, and then we can also share the replay with you. So we want to make it accessible for everybody, and we'll be really updating. We've spent a lot of time building out that presentation, and really just only have a couple more slides just to fill out as that CPI number actually comes in on Tuesday morning, that inflation print. So that'll be interesting to see. Really just wanted to finish off with company-specific news this morning, just give you a sense of what's going on in the market. On the real estate investment trust side, we've seen now two very large, very well-known apartment real estate investment trusts who are now selling stock. We had Avalon Bay yesterday, and we have Camden Property Trust this morning, and they're selling stock. Why would a real estate investment trust sell stock? Well, you sell stock because you want to buy an asset. And you do that because your stock value is higher than the asset value. And so the reason you sell stock is because the stock essentially is overpriced relative to the value of the assets. So this is signaling that the real estate companies themselves actually think that their stocks have gone too far. And they surely have. I mean, we've had one real estate investment trust that's gone up 4 or 5x since the bottom of COVID, which is pretty remarkable for a real estate company. So that's something that we're continuing to watch very closely. I do wonder, especially as we're talking a little bit more about disinflation and inflation starting to come down on the backside here, if we might see that have a negative impact on real estate investment trusts, as well as the cap rates as cap rates start to go up. We also had a couple analysts upgrade some oil field servicers, including NOV, Schlumberger, and Baker Hughes. That's pretty interesting. It shows that there's more of an impetus behind some of these companies to actually invest in new wells and new drilling. And then we continue to have a ton of noise on the freight side. Bank of America downgraded a host of transportation stocks, including Union Pacific, including UPS, yesterday, saying that freight rates have really come down fairly dramatically and fairly quickly. And again, this kind of feeds into our thesis. And again, we'll talk a little bit more about this on Tuesday, but it feeds into our thesis that inflation is topping, or maybe even topped in February. So again, we get the data on Tuesday morning, so we'll be able to audit ourselves ahead of the presentation if we're wrong. But that is the current state of affairs. And then finally, Americans continue to buy a lot of spirits. That's leading Bank of America this morning to upgrade Diageo and raising the price target on that. So overall, a lot of noise in the market right now. We're trying to sift through it all and be in the spaces where you're not going to get signed up for a massive, significant drawdown. And that's kind of our strategy, is how we're approaching it right now. With that, have a great weekend. Enjoy the Masters and enjoy baseball as a maskless baseball right now, and a maskless Masters. All right, have a great day out there, and we'll see you on Monday.